When most people think about investing in the stock market, they imagine steady growth, predictable returns, and a comfortable sense of security. But the truth is, if you want real wealth, if you want to get ahead of the curve, sometimes you have to pay attention to the things that others are too afraid to touch. Today, I want to talk about 3 stocks that are like volcanoes, stocks that are quiet now but have the potential to erupt at any moment. Investment, creating massive opportunities for those who recognize their power before the rest of the market catches on. You see, the stock market is full of noise. Every day, headlines shout about the hot stocks. Analysts argue over what's going up or down, and social media is flooded with opinions from people who may not have done any actual research. But beneath all that noise, there are companies quietly building innovation, expanding market share, investment, and setting the stage for massive growth. These are the companies that, when the right conditions align, can explode in value almost overnight. And the best part, because most investors are too focused on safe bets or the latest trends, investment, the real opportunities are often overlooked. Now, I'm not talking about random lottery tickets here. These are stocks backed by strong fundamentals, real products or services that are in demand, and management teams that know how to execute a vision. What makes them volcanoes is their latent potential. Like magma beneath the surface, it's building pressure. And when the right moment comes, the eruption can be powerful. The key is understanding what's happening beneath the surface, recognizing the warning signs, and knowing when to act before the eruption becomes obvious to everyone else. Timing is crucial. The beauty of a stock market volcano is that if you're paying attention, you can enter early, ride the initial surge, and capitalize on growth before the hype drives prices even higher. But of course, with potential for explosive growth comes risk. Not every volcano erupts as expected. Some remain dormant longer than anticipated, and some might not erupt in the way you predict. This is why research analysis and staying informed are non-negotiable. You have to know the sectors, the market conditions, investment, and the companies inside and out. By the end of this discussion, you're going to understand why these 3 stocks have been singled out, what makes them special, and why their potential growth could rival even some of the most talked about companies in the market. You'll see how the combination of fundamentals, timing, and risk management makes investing in high potential, volatile stocks not just exciting, but potentially life-changing. So whether you're a cautious investor who's looking for a calculated risk or someone who thrives on spotting opportunities before everyone else, today's focus on these 3 volcanic stocks will give you insights you can use to approach the market more strategically. Because in the end, wealth is built by those who recognize explosive potential when others see only calm. When we talk about stocks that are like volcanoes, the first thing we need to understand is volatility and potential. Volatility isn't something to fear, it's something to recognize, study, and use to your advantage. Many investors shy away from volatile stocks because they associate volatility with risk, uncertainty, or even danger. But in reality, volatility is simply the market's way of signaling opportunity. Think about a volcano in nature. An investment, on the surface, it might seem calm, dormant, even harmless. But beneath that surface, there's immense pressure building, energy accumulating, and when the conditions are right, it erupts in a way that reshapes the landscape. The same is true for certain stocks. At first glance, they may appear ordinary, moving within predictable ranges, but the underlying fundamentals, market trends, and innovation potential create pressure that can lead to dramatic upward movement once triggered. The key to navigating this kind of investment is understanding the factors that create potential. This involves a deep dive into the company's core business model, its industry position, its competitive advantage, and the catalysts that could push it to the next level. Volatile stocks that have explosive potential are rarely random. They are backed by real business performance. Sometimes it's the introduction of a groundbreaking product, a shift in market dynamics, or a strategic acquisition that sets the stage for rapid growth. Other times, it's the investor sentiment that changes as more people recognize the value that has been quietly building. In every case, the potential for growth is tied to real-world factors that influence demand, revenue, and ultimately stock price. Another critical component of volatility and potential is timing. Unlike safe, slow-growing companies, these volcanic stocks require careful observation. Investors need to monitor market signals, news, and industry trends to identify when the underlying pressure is reaching a critical point. Entering too early might mean waiting for months as the market slowly adjusts, while entering too late could mean missing the initial surge of growth. The best investors understand that volatility is both a warning and an opportunity. It signals that the stock is moving, and while the movement can sometimes be unpredictable, the informed investor sees patterns, historical context, and potential triggers that can guide decision making. Understanding volatility also means accepting short-term fluctuations. When a stock is like a volcano, it is rarely a straight line upward. There will be moments of doubt, pullbacks, and temporary dips that might scare casual investors into selling too early. But those who grasp the potential recognize that these fluctuations are part of the natural rhythm of explosive growth. They understand that patience, combined with strategic action, allows them to benefit from the full potential of the stock once the market recognizes its true value. Volatility is a test of discipline, research, and conviction investment, and mastering it is essential for anyone seeking high reward opportunities. Finally, when assessing a volcanic stock, look for signs of accumulated energy. This can include rising revenues, increasing user adoption, expanding market share, or even insider buying, all of which indicate that the company's potential is being realized beneath the surface. Each of these factors contributes to the pressure building within the stock, just as magma accumulates within a volcano. The difference is that, unlike natural disasters, financial eruptions can be predicted with enough careful analysis, allowing investors to position themselves to benefit rather than be surprised. Volatility and potential go hand in hand. One cannot exist without the other. The key is to recognize the signals, respect the inherent risks, and prepare to act decisively when the moment for growth arrives. In summary, volatility is not the enemy. It's the landscape that reveals explosive potential. By understanding the underlying pressure, analyzing fundamentals, monitoring timing, and respecting the natural fluctuations, investors can identify volcanic stocks poised to erupt. These are the opportunities that, when approached with knowledge and discipline, can transform ordinary portfolios into extraordinary growth stories. The calm surface is just the beginning. The real power lies beneath. When discussing stocks that resemble volcanoes, the second key element to understand is market trends and timing. Just as a volcano's eruption depends on the slow accumulation of pressure over time, the explosive growth potential of a stock is rarely random. It is tied closely to broader market trends, economic conditions, and the timing of key catalysts. Many investors make the mistake of looking at a stock in isolation, focusing solely on its past performance or current price, without considering the market forces that could either ignite or suppress its growth. Understanding trends and timing is about seeing the bigger picture and recognizing when the conditions are aligned for a stock to truly erupt. Market trends are often the unseen forces that shape a stock's potential. A company may have incredible fundamentals, innovative products, and a talented management team, but if the market isn't receptive, the stock's growth will be limited. For example, trends in technology, renewable energy, or biotech can create periods of intense investor interest and capital flow, driving up stock prices rapidly. Investors who ignore these trends risk missing the initial surge or entering too late when the majority of gains have already been captured. On the other hand, those who understand and anticipate these trends can position themselves early, capitalizing on the momentum that builds before the rest of the market catches on. Timing is everything in these scenarios. Timing isn't just about entering at the right moment, it's also about understanding when to be cautious or exit. Just as a volcano may release pressure in minor eruptions before a major explosion, a stock may experience spikes, corrections, and temporary dips along the path to significant growth. Investors need to recognize that these fluctuations are not random. They are signals. Learning to read them requires attention to volume, price action, news flow, and macroeconomic factors that influence investor behavior. Patience and vigilance are essential because the optimal moment to buy or sell can significantly impact overall returns. Acting too early might tie up capital in a dormant phase, while acting too late might mean missing the peak of the eruption. Another important aspect is the alignment of catalysts with market conditions. Catalysts can include earnings reports, product launches, regulatory approvals, or strategic partnerships. The impact of these events, however, is amplified or muted depending on the broader market sentiment. For instance, investment, a company announcing a breakthrough product during a bullish trend is likely to see far more dramatic stock movement than if the same announcement occurs during a market downturn. This is where timing intersects with trend analysis. Success comes from combining an understanding of the stock's intrinsic potential with awareness of the external environment that influences investor behavior. Risk management also ties directly into market trends and timing. Volcanic stocks are inherently volatile, and without proper timing, investors can be caught off guard by sudden swings. Using market indicators, tracking sector performance, investment, and paying attention to macroeconomic news can help reduce the risk of entering a position too early or too late. In addition, understanding seasonal trends or cyclical behavior in certain industries can give investors a strategic advantage. Timing isn't just about guessing when a stock will rise. It's about using information, patterns, and data to make informed decisions that maximize potential while mitigating risk. Finally, mastering market trends and timing is about cultivating a mindset of awareness and anticipation. Investors who succeed with volatile, high potential stocks are constantly observing, learning, and adjusting their strategies. They recognize that explosive opportunities don't occur in a vacuum. They are shaped by forces beyond a single company's control. By understanding the rhythm of the market, monitoring emerging trends, and preparing for key moments, investors can position themselves to benefit from growth that others may not see until it has already occurred. Timing and trend awareness transform potential into actionable opportunity, allowing investors to ride the wave of explosive growth rather than be swept aside by it. In short, understanding market trends and timing is not optional when dealing with stocks that have volcanic potential. It is essential. Recognizing when external forces align, anticipating key catalysts, and acting strategically allows investors to capture explosive growth while avoiding unnecessary risk. Just as a volcano doesn't erupt at random, these stocks don't surge without reason. Success comes to those who read the signals, respect the timing, and are ready when the moment of opportunity arrives. When examining stocks that have the potential to erupt like volcanoes, investment, one of the most critical factors to consider is fundamentals and research. Too often, investors are drawn to hype, social media chatter, or the latest hot stock without taking the time to analyze the underlying business. Volcanic stocks, despite their explosive potential, are not chosen at random. They are grounded in strong fundamentals, solid business models, and real-world growth potential. Understanding and evaluating these fundamentals is what separates speculative gambling from strategic investing, and it's the foundation for identifying stocks that can truly deliver extraordinary returns. At its core, fundamental analysis is about understanding a company's financial health, its position in the market, and the factors driving growth. This involves digging into revenue streams, profitability, debt levels, cash flow, and management efficiency. A stock might look cheap on the surface, or it might have experienced recent volatility that scares off other investors, but careful analysis can reveal hidden value. For a volcanic stock, fundamentals act as the magma building beneath the surface. The stronger and more consistent the underlying metrics, the more likely the stock is to erupt in a meaningful and sustained way. Investors who ignore these fundamentals risk exposure to short-term noise. When discussing stocks that have the potential to erupt like volcanoes, the fourth key point is risk management. Investing in high-potential, volatile stocks can be incredibly rewarding, but it is equally important to recognize that these opportunities come with significant risk. Volcanic stocks, by their very nature, are unpredictable and can experience dramatic price swings in a short period of time. Without a carefully crafted strategy to manage risk, an investor can quickly go from riding a wave of explosive growth to facing unexpected losses. Understanding risk, preparing for it, investment, implementing strategies to protect your capital is essential to surviving and thriving in the world of high volatility investing. The first step in effective risk management is acknowledging that volatility is part of the game. And just as a real volcano can erupt without warning, a stock that has massive potential can experience sudden drops, pullbacks, or temporary corrections. The key is not to avoid these stocks entirely, but to approach them with discipline and a clear understanding of the potential upsides and downsides. Accepting that short-term fluctuations are inevitable allows investors to stay calm during periods of market turbulence and avoid making emotionally driven decisions that could harm their portfolio. Diversification is a fundamental aspect of managing risk in volatile stocks. No matter how confident you are in a single stock, putting all your capital into one position is inherently dangerous. Spreading investments across multiple high-potential stocks, or even balancing them with more stable assets, reduces exposure to the failure of a single company. In the context of volcanic stocks, and diversification allows you to benefit from multiple opportunities while protecting yourself from the full impact if one stock does not perform as expected. It is a simple yet powerful way to navigate the uncertainty that comes with high-risk investing. Another critical aspect of risk management is position sizing. This means determining how much of your capital to allocate to a particular stock relative to your overall portfolio. Even if a stock has enormous potential, committing too much capital to it can amplify losses if things do not go as planned. Successful investors carefully calculate their position sizes based on the level of risk they are willing to accept, their investment horizon, and their overall strategy. By controlling exposure, you maintain the ability to stay in the game long enough to capture the full potential of a stock when it does erupt. Stop losses and exit strategies are also essential tools in managing risk. Having predetermined levels at which you will sell or reduce your position ensures that losses are contained and emotions do not dictate decisions. For volcanic stocks, where prices can swing dramatically, investment setting clear rules for taking profits and cutting losses can make the difference between a temporary setback and a catastrophic loss. Equally important is maintaining flexibility. Market conditions change, and strategies should adapt to reflect new information, emerging trends, and evolving risks. Finally, risk management is not just about protecting capital. It is about positioning yourself for long-term success. high potential stocks are rarely smooth rides. The volatility that scares off many investors is the very same factor that creates extraordinary wealth for those who are prepared. By implementing proper risk management strategies, you create a buffer against unexpected events, maintain mental clarity during market turbulence, and retain the ability to act decisively when opportunities arise. The goal is not to eliminate risk entirely, which is impossible, but to control it in a way that allows you to benefit from explosive potential while minimizing the chances of permanent losses. In summary, risk management is the safety net that makes investing in volcanic stocks sustainable and strategic. By understanding volatility, diversifying holdings, sizing positions appropriately, setting clear exit rules, and staying disciplined, investors can navigate uncertainty and capitalize on the explosive potential of these opportunities. The thrill of high reward investing comes with danger, but with proper risk management, that danger can be mitigated and the path to substantial gains becomes far more achievable.